Hello and welcome to Conway Conversations, a deep dive into all topics real estate. I'm your host, Jack Conway Company. I'm Carol Bulman, and our topic this evening is the first-time homebuyer. To walk us through the opportunities and the process for a buyer purchasing their first home this year, I'd like to welcome our four guests. First, I welcome Allie Trowbridge. Allie is a sales professional out of our Scituate office. Welcome, Allie.
Thanks, Carol. I'm excited to be here.
It's good to see you. Our next guest is Bonnie Steiner. Bonnie is also a sales professional, and she's working out of our Lakeville office. Bonnie, welcome.
Thanks, Carol. Hi, everyone.
Good to see you.
Thanks.
And moving on to the finance side, I'd like to welcome Sean Tierney. Sean is a loan officer with our own Conway Financial Services, right, headquartered here in our Hanover headquarters department. Sean, welcome.
Excited to be here, and thanks for having me.
Thank you. And last but certainly not least, I'd like to introduce our partner, my partner with Columbia Title and Mass Real Estate Law, Andy Bulman, Esquire. Welcome, Andy.
Thanks, Carol. Hello, everyone.
Okay, so this is a great topic, and there's a lot of pieces to this. And to kind of set the stage for this conversation, I want you to picture this enormous population group, the millennial population group. So millennials in the year 2023 are turning between the ages of 27 and 42 years old. The average age for a first-time home buyer to purchase a home is actually crept up a bit. It's actually now at 36 years old. So basically what that tells us, whether we are a first-time home buyer visiting this evening or a real estate professional or a guest of Jack Conway in some way, is that there's a lot of people that are going to be looking for their first home in that millennial population group. Now, remember I said it was 27 years old. Right at the end of that group, right before them, is Gen Z. And they're also going to be starting to look for homes. A lot has changed over these last few years. We talk a lot about inventory, and an inventory when it comes to real estate sales is the number of houses on the market. When you have less homes on the market, it certainly affects business. It certainly affects the average price of homes, and we'll talk a little bit about that. Also, interest rates have been moving around, up a little, down a little, and they're definitely affected by different things going on in the economy. That affects the first-time home buyer. So what are some of the challenges that a first-time home buyer has in front of them? Can they afford a home? Do they have the down payment needed? Do they know where they want to buy? Is the area that they want to buy the right area lined up to what they can afford? Who are the people that are going to help them through the process? So we're going to be covering all of these different aspects tonight. And before we do, I want you to put a picture in your mind. And that picture is of a symphony orchestra. So if you think of a symphony orchestra, it's made up of different instrument groups. You've got the brass, you have the drum section, you have the keyboards. They're all working in their own respective part of the symphony to make this wonderful, pleasant sound that is coming as a result. In front of the symphony is the conductor. The conductor's job is to make sure each one of these groups is doing their job, making sure they're hitting their timing. Everything they're doing is coming out the way as expected. They're communicating properly. So if you think about a real estate transaction and that journey that a first-time home buyer will embark upon, I want you to think about your real estate sales professional as the conductor in front of the orchestra. So we're going to start tonight's conversation with some questions for Allie and Bonnie. And as I mentioned, they are real estate sales professionals, also known as realtors. And they work closely, very closely with their buyer-seller clients. Basically that conductor experience, helping them, shepherding them through the process, answering the questions, making sure everybody's communicating. So I'm going to start with Bonnie. And Bonnie, in that conductor role, what do you see as the very first step for a first-time home buyer?
Well, for the first-time home buyer, the first thing that they want to do is they want to find a conductor. They want to align themselves with a good local agent and local to the area that they think that they want to purchase in. That's important. They want to make sure that they are with the neighborhood professional, the person who knows the area that they want to buy their home in. And they want it to be someone that they know, like, and trust. They are going to be making a huge purchase. So they want to align themselves with a realtor, sit down with that realtor, have a good one-on-one conversation, or a buyer's consult, as we call it, to make sure that they are comfortable with this person and that they do develop a good trust with this person. And to be quite honest, that they like this person, because you're going to spend a great deal of time together. Quite often, realtors and clients become family, and it's a unique and special relationship that does develop with realtors and clients.
It's interesting the way you describe that, Bonnie. You describe this as a very personal experience, and a lot of the populations, a lot of people that may be just starting to look, may think that a lot of this work can be done online and poking around in different websites. Why do you feel that it's much more personal than that? Why is that important for the actual buyer?
Well, it's important for actually not only for the buyer, but for the realtor too. We want to be able to help you, and we want to be able to have your best interest. And sitting down, having that one-on-one meeting, it allows us to connect. It allows us to get to know what it is that you're looking for. It also allows us to explain to you the process, because it's a process, and this is a huge undertaking, and there are many steps involved with the process. Sitting down, going through the process from start to finish, it's just, what to expect. Yes, you can Google it and you can read all about it, but sitting down, connecting with someone, and having someone that can literally hold your hand through that process, it just makes things easier for you, for the buyers. A seamless transaction is what we want to provide, and having that local person that can walk you through it is so important.
All right, that's great. And I know you do this very successfully, and have made a huge impact in a lot of people's lives. Now, Allie, I know you also provide that personal commitment to your buyer and your seller clients. But as it relates to your buyer clients, what types of expectations do you set when you first meet with a first-time home buyer?
That's a great question. So when I first meet with clients, either an individual or a couple, I like to sit down and just kind of get a generalized idea of where they are and what they're looking to do, where they're currently living, for how long, what towns they're interested in, and just generally what style homes they are looking for, where they are in the pre-approval process. All of this kind of gives me a better idea of what we need to go over, and where we need to start and where we need to go to get them to the purchasing their home.
Okay, so that sounds like there's a bit of a matchmaking process here.
Definitely.
So you're gathering that information, and then once you have that information, that steers you to, or kind of directs you to, certain properties. Are there price ranges that you're looking at? How do you do that matchmaking process?
Sure. Well, the first thing is, obviously they need to be connected with the loan officer so that they know their budget. We know what price range we can be looking in. That's definitely the first thing that they need to do. Within that, and looking at the towns that they're interested in, I personally like to sit down with either the individual or the couple, and I give them separate pieces of paper, and we list down, or we write down what they are interested in, what they're looking for in their homes. And this is sometimes really interesting, because at the end of listing everything that they possibly could think of in their next home or their first home, I ask them to pick 3 or 5 of the top items. And then we compare, and that comparison is sometimes very interesting because if it's a couple, this is when we figure out if everybody's on the same page, the same team, and that those top three are ideally what we look for in the home, because not every home is going to fit the bucket list of 20 items. And then once we do that, we create kind of a funnel. We take all the MLS, the multiple listing service, the non-MLS properties, the new construction, the for sale by owners, and we put them all together. And by the process of elimination, so that you're not missing any property, we kind of dwindle it down. It might start from 100, it might start for 50, and then we really narrow it down to maybe a couple dozen. And that's definitely where we start the process of looking at the homes.
Wow, that is huge. And you said a couple of things that I just want to stay on for a minute. You mentioned this list of MLS for sale by owners. Can you tell the listeners what MLS stands for, first of all?
So it's the multiple listing service where any property in Massachusetts, you can search by town, you can select a price range, and they will all come up as active. Your agent can show you under agreements so that you can see the price range. They can show you sold comps from that MLS service so that you get an overview of what is active on the market, what's under agreement, what's contingent, and what has sold.
Okay, that's great. Huge tool. So I think what's really important there is there's a program that we all subscribe to, and it's our MLS PIN to be particular. And all the real estate agencies subscribe to this same program. Is that correct?
Yes.
So we're all looking at this information. That's really important because if you're on the selling side, you want as many eyeballs, right, looking at your home as possible, because that helps you to get the best price, the best buyer for your home. So you're going through all those properties. You also mentioned, Allie, for sale by owners. So that's not an MLS, is that correct?
That is not, and neither are the non-MLS listings. Those are property owners that have decided to list their home. They have an agent, but they prefer not to open it up to agents across Massachusetts. So that's where having a local agent that is well connected and networking for you, where they can find that information and those properties.
Huge. So that, just to kind of stay on that topic for a minute, there are people maybe for privacy reasons or something to that effect. There might be something sensitive. They might not want everybody to know that their house in the market, but because you're a local agent, I think this is really critical. You will reach out to the other agencies and everybody shares. Is that correct? Okay. Yeah, that's great. That's a great point. Bonnie, going back to that interview that you have in the beginning, and I know you have a really specific process you go through. My understanding is you go through some of the standard documents and materials. Can you walk us through what your process is there and what are some of the items that you discussed with first-time buyers during that meeting?
Sure. There is, again, it's a process, and it can be overwhelming. And one of the things that can be overwhelming about this process is paperwork. There's a lot. There's a lot that the state of Massachusetts requires us to present, to put in front of buyers, whether it be, and there are forms for agency disclosure so that they understand who's representing them, and certain, when they go to an open house, who's representing them. So there's those forms. Because Conway is such a large company, there's a good chance I'm hopefully going to be showing them some homes that are listed by another Conway agent. So there's a form for, disclose a, designated agency that we can talk about that so that they understand, yes, we're going to go to another Conway listing, but that listing agent represents the seller. I still am your buyer's agent. So there's a lot of forms and a lot of different scenarios that come into play during this process. So we go through those forms, and some of them are forms that I'm required to present, like a fax for home inspections. So those things we can kind of get out of the way at that initial meeting so that when we are out actually doing the fun part and, the shopping for homes, we've already covered the basis of the forms that are required. And another big thing that we do at the buyer consult that I like to do is I sit and go through the offer form from start to finish, so that, when we do go out and we find that one that we know is the one, when we sit down to write that offer, it's not the first time they're seeing an offer form, so that they understand, yes, all right, I remember, Bonnie, yep, we have to put $1,000 or whatever down with the offer. There's so much we're putting down with the purchase and sale, that we have 10 days to get a home inspection, that we have a mortgage contingency date. So all that these dates that are involved with the offer, they're things that we've already discussed, that we've talked about. So it's they know what to expect when it's in front of them, and they're really excited and nervous that, that they're hopefully buying this home.
That's great. I love that. I think that's really important to prepare them as much as possible. And that's fabulous that you do that. And I know our real estate professionals generally do that. So that's great. You talked about home inspector, Bonnie. So explain for a moment what a home inspector's job is, and do they work for you, or are they separate from you? Like, what is their job?
A home inspector basically works for the buyer. And we just came through a market where we were seeing home inspections waived a lot. Different people have different feelings on that. I have mine, but a home inspector is hired by the buyer to go in. Basically, their job is to find everything wrong with that home. And it's not to scare a buyer. It's basically, it's just preparing the buyer that, okay, this is the home, and it's not a pass or a fail. It's just, these are the things that have come up. These are the things you need to prepare for. That the roof is nearing the end of its life. So we need to budget in the next, 3 to 4 years. It's going to need a roof. So this is what we're going to need to budget for. Or, there may be a defect in the home that the seller may not have even known about, or a safety issue that we bring to the seller's attention, and they're grateful that it was even found, because it's something that they may not even have realized. So a home inspection is nothing to be afraid of. It should be embraced, and it shouldn't be used to scare anyone. It should be used as a budgeting tool, and as it's for the buyer's knowledge, so that they know what they're undertaking.
I'm glad you spent that detail on home inspections, because you had mentioned that we just came through a market where sometimes home inspections were waived. And you had said that you have an opinion on that. I have an opinion on that too. I don't like to see people waive home inspections. They certainly have a right to do so. The reason why I don't like to see that happen is because, as you said, Bonnie, you want the buyer to make the most informed decision as possible. And you talked about the roof. So for instance, if a person puts, I don't know, a large down payment, $50,000 into a home, all their life savings, and they don't check to see how old that roof is, they may be faced with a large expense very early on, right? Yeah.
Correct.
Okay. Yeah. So fortunately, and it seems like, and you can say this certainly better than I can, are you seeing less need or less pressure on buyers having to consider waiving home inspections in the market that we're in right now?
Right now, yes. However, some of the trends that we're seeing, I think it will be a very busy spring. But if you align yourself, again, with a good, knowledgeable agent, there are so many ways to move forward, still having the inspection, still knowing what to anticipate that should not affect your purchasing a home.
Okay, that's great. I'm so glad you ended that piece of it with that, because even there could be, we're looking at still a very tight housing market, right? Allie and Bonnie, I mean, there's a lot of competition, a lot of people looking to purchase a home, but not a ton of properties to sell. So when you're running into that type of market, there is sometimes that pressure to make that offer as simple as possible so that a seller will take it, right? So that's where Bonnie and Allie and other professionals really come in. So, I mean, so important that if when a buyer's in that situation, they are going to be as informed as possible because they're working with an expert. It's so critical.
Yeah.
Did you want to add anything to that before we get off of home inspections?
No, it's just very important to make sure that you know what you're undertaking.
Right.
You know, that's the key, is just to know, you want to know what to expect.
Right. You started off the conversation, Bonnie, with people should choose a realtor they know, like, and trust. And that's a really, really important term, or sentence, I guess it is, because the trust part is critical. You want to make sure this is a realtor that is going to tell you the truth and prepare you for everything you can possibly prepare for you, so that you're going in with a positive feel, and you'll have a positive outcome.
Agreed.
So we talked about the home inspector. Allie, I think you talked a little bit about the loan officer. I'm going to come back to you, Allie, and talk about that team. So we'll get back to the symphony again. You are the conductor. You have the different groups that you're coordinating. In addition to the home inspector, what are the other players? Who are your other team members when it comes to a smooth transaction?
Sure. Yeah, you definitely have a team. You have your attorney who's doing title. You have your loan officer who is walking you through the loan application for getting a pre-approval. And then you have your home insurance, your homeowner's insurance, which you want everybody to be able to work well together and efficiently. And you want there to be a good communication. Right, because oftentimes you're looking at properties on the weekends, at night, and when you decide you finally want to purchase your home, or put an offer in rather, if you have questions, you want to be able to reach out, and you're going to want a response right away. So knowing that you have a group of people behind you who do this, and they want to see you succeed and make an educated choice, or, like you were saying, going forward in the process and feeling confident with it. If you have those questions, you want them to be answered before putting in an offer, and being able to communicate with any one of them is really important.
All right. So again, it comes back to surrounding yourselves with people you know, like, and trust.
Exactly.
So you know that these are people that you'll work well together, that you feel that will work well with your clients. And the goal, of course, is a successful and smooth closing.
Definitely.
Right. All right. So one really important player in this symphony of people is the mortgage loan officer. There's different types of lenders available to our clients. They could be loan officers representing banks, mortgage companies, credit unions. We are very fortunate. We have our own mortgage company at Jack Conway Company. The name of the company is Conway Financial Services. This is an option for our clients, and it's an option that is discussed with our clients, and they can compare with other lenders as well. That's certainly their opportunity. So representing Jack Conway's mortgage company, Conway Financial Services, is Sean Tierney. Really important part of this process is the lending part for first-time buyers, because there can be some challenges for first-time home buyers that other repeat buyers might not have. Is that correct, Sean?
Absolutely. So particularly being a first-time buyer, much like the agents like to do, is I like to, discuss a little bit about what it means to actually be a first-time home buyer, and then dive into a little bit more as to the particular situation. In the beginning of our conversation, Allie mentioned, it's an individual, or are there two people, right, that are looking to purchase their first home? So right off the bat, are we working with, one person? Are we working with two? And what we like to do is mainly boil it down into three smaller sections that ultimately develop your budget. First, which would be your credit. Second would be your income or employment. And third would be assets. And we're kind of just going to touch on the three of those anyway. And as you could imagine, credit scores vary. And to obtain a mortgage, if you can go as low as a 620 FICO score, and FHA allows for 580. But of course, the lowest are just skating by, as it is in normal life, is not always the best. So of course, the higher that we can get your FICO scores or your credit scores, the more attractive terms or interest rate you would see when you're applying for a loan. Also, one little thing that I think first-time home buyers may get caught up on is maybe if one of those two borrowers does not have an excellent credit score. One of those little lessons that I like to educate first-time buyers on is if there are two people involved and one person does not have the best credit score, the interest rate decision is actually made off of the lesser qualified borrower. Always things that we like to discuss, but even in that instance, here at Jack Conway's, we do have credit repair as well. So if anybody has questions about their credit or if they can increase their credit scores, all things that we can most certainly help them out here at Jack Conway.
Sean, I want to stay on that point about credit for a second. So if I am a potential first-time buyer and I'm listening to that, and I might be thinking, oh, first of all, how do I find out what my credit score is? So that how does a person find out what their credit score is?
So it's a great question. So generally, most people today have their credit card applications on their phone. Some of them are more accurate than others, such as a Discover or a Chase Bank. The number one app that I always have to draw people away from is going to be Credit Karma, particularly when you're looking to apply for a mortgage loan. You're always looking for a FICO score model, particularly the FICO 8 algorithm. Other applications, such as a Credit Karma, they'll show you a score, but what it's truthfully not is a FICO score. The score that they show you is a different calculation of what a credit score they believe to be, but at the end of the day, it's not a FICO score. So most of your credit card apps will have a slightly more accurate place to view your credit.
So you're saying FICO, and that's an acronym, right? So it's just tell again, let everybody know what those letters are so they can look that up.
So it's a great question. I'd say that the FICO is actually a great question. All I can tell you is that there are numerous credit algorithms anyway. They've actually gone from a series of numbers, but as of most recently, particularly what they're just going to be looking for is that FICO 8. FICO
8. So everybody needs to remember that. If they're not sure how to find that, they can give you a call, Sean, and you can direct them.
Absolutely.
Okay. So another important part here, if I'm a first-time buyer and I'm wondering what my credit score is, so I look up and I find out what my FICO 8 is. Now I'm faced with this number and I'm not really sure what it means. The best advice I know that all of you would give a person is you've got to find out what your credit score is really long before you start looking for a home. Is that correct?
Absolutely. Yeah. So we would generally, as we start the pre-approval conversation, is we usually recommend that 4 to 6 weeks before you actually begin your home purchase anyway. For that reason, if anything happens to pop up on your credit report, or if there is the opportunity to increase your credit scores, that is something we absolutely want to take advantage of course, before you purchase your home, because again, the higher credit score that you have, generally the more attractive interest rate pricing you will receive as a buyer.
And you talked about that credit repair. That's something that's available at Conway Financial Services?
Correct, absolutely. So our credit repair department, what we do is we can actually review credit reports from top to bottom. And there are certain instances, where credit scores can be repaired rather quickly, and other scenarios where it takes a little bit longer for you to recoup or, increase those scores anyway. Generally, what we're referring to is revolving credit or your credit cards. Not a lot of people know, just by holding a balance over a third of the limit on each individual card, so not over the entire picture, each individual card can actually bring your scores down anywhere from 20 to 60 points. And it's nothing that they can't recover from getting back underneath that balance. But of course, people take on credit card debt for a variety of different reasons. As they're preparing to buy a house and possibly looking to pay off a credit card, at the end of the day, what they're looking at is their bank account or their assets, right? And are they comfortable putting this money towards the transaction and paying off credit card debt? It can be a little bit scenario specific, but we always take those conversations individual with each person to make sure that they're ultimately comfortable at the end of the day.
All right. So you said a third. Now, let me just throw an example out. So if I had 3 credit cards and they both had a $10,000, all 3 of them had a $10,000 limit. and my credit was less than stellar. I learned that, let's say, and I'm looking at my credit cards, they're all maxed out. They're all at $10,000.
Yeah.
One way that I could just improve my credit score fairly quickly is by paying that down to say $3,000 a piece.
Correct. Absolutely. So that would be the fastest way in this particular scenario, right, to increase someone's credit scores. Different conversations we're having are missed payments, for any reason whatsoever, collections or bankruptcies. Those are derogatory remarks that sit on a credit report for a longer period of time. Also very specific as to how old they are or how long they've been on a credit report. Just because you pay it does not mean that it goes away. And if you do pay it at a certain time, it can actually be more damaging than helpful. So you always want to get the right counseling as to what should be paid off if it needs to be. And one of the more upfront conversations that I prefer to have with people that are buying their first house, if they need it.
Now, is this service cost any money?
It does not cost any money for the evaluation itself, but of course, the conversation that we had is if the result is paying down a credit card, that of course would require funds.
You don't
to
pay
down that
people's credit cards down for them.
Not at this point in time. That's not a service that we can offer here at Conway Financial.
Okay, all right. Something maybe someday soon. All right, so going back to Allie and Bonnie for a second, then we're going to come back to you, Sean.
Yeah.
So what you really want your first-time homebuyer clients to do then is to contact you early on. I'm thinking of buying a house sometime in the next 2 or 3 years, right? And at that point, you will refer your clients to Sean or a loan officer that is appropriate for the area, and they will start that process. But they're not making any commitment at that point. Is that correct? Is that what you like to see people do?
Definitely.
Okay, good. All right.
Yeah,
so-
absolutely. Trisha, through Conway Financial is a loan officer that I've been with for years. And we have some clients that she's been working with for 2+ years, helping them get them in the position they need to be to purchase a home. So it's a huge benefit that we have in-house.
So they're working on credit, savings, employment, like are they kind of all the above?
Usually it's credit and savings. She's helping get them in a position so that they're ready to go.
That's amazing.
Yeah.
I'd like to add something too, Carol.
Yes.
So a lot of first-time home buyers that, they started looking maybe in the height of the COVID and realized it was really competitive and maybe became a little, disheartened by the whole process, but they had already spoken to a loan officer, but then they stopped. They took a break. I think it's really important to point out that obviously everybody knows that the interest rates have rose, and that you should definitely check back in with Sean or your previous loan officer to have that updated, because your budget may have changed, and that's going to help you when you restart looking for a home.
What a fabulous point that is. So go back to the loan officer, update your pre-approval. Allie, will you explain to people what a pre-approval means?
Well, pre-approval just means that you have had somebody look at, like Sean just mentioned, your FICO score, your employment, and your assets, and has given you a budget that you are able to afford, so that when you're looking within that budget, or below that budget, if you can offer a little bit higher, what funds you have to put down. And it gives the listing agent and the seller of the home or the property that you're looking at the confidence that you have those assets and the money to purchase the home.
That is such a critical point. So the pre-approval not only provides the buyer the information they need to, as far as what they can afford, right? But also provides the seller the ability to feel comfortable in accepting their offer, that this is legitimate. They do have this money, they have this FICO score, they have these jobs, etc. So Sean, I've heard of a pre-qualification versus a pre-approval. Can you explain the difference between the two and why it's so important that a person gets a pre-approval?
Absolutely. So the main difference between your pre-qualification and a pre-approval is mainly going to be that credit inquiry number one. So pre-qualification to start is more so of an upfront conversation with your mortgage lender, a little bit about where your estimated credit score is the most important piece of that sentence, I suppose, and a little bit about your employment and your assets for down payment. Essentially, from there is we can get somewhat close, to a maximum pre-approval range. But of course, none of those numbers are set in stone until you actually go through that pre-approval process anyway. That's when essentially we have the verified information of your credit score. We've also reviewed a handful of your employment documents, such as your W-2s and 1099s, as well as verified the funds towards your down payment. So those three buckets, again, your credit score, income, and assets, mainly are what make up your pre-approval process, so that as you do go out to look for some houses, you're going to know the very top of your price range. And ultimately, what we like to do is decide what's comfortable, right? Some people may want to put their entire paycheck towards their home. Other people most certainly do not want to do that. And those are the options that we like to present people with.
So if a lender provides a pre-qualification, basically they have a piece of paper that is saying what they're approved for based on a conversation that they had with.
Correct.
Where pre-approval, Sean, you're actually going into the credit bureau, you're pulling the credit report, you're reviewing it, you're reviewing pay stubs, W-2s, et cetera, for income, you're reviewing bank statements for people's assets.
Correct, absolutely. And the wording on those two letters is going to be drastically different from one another, as the pre-approval letter would be the verified information that you are showing this seller that you're hoping to purchase their house anyway, versus the pre-qualification, which to a seller, in all honesty, means that they're not ready to go at this point in time. Yeah. They're going to be looking for a pre-approval letter.
Important. Okay. So we're still at the beginning part of the transaction. Andy, thank you for standing by. We're going to get to the sort of the middle and the end part of the transaction. But before we get there, I want to stay with Sean for a little bit, because you talked about different loans. You talked about FHA at one point. So there are different ways, different mortgage products that are more suitable for a first-time home buyer in some cases. Can you give us a brief overview of what those might be?
Absolutely. And where I usually like to start is in relevant to the type of property in which they're looking to purchase, whether it is a single family home, a multi-unit home. So from 1 to 4 units would be your 2 to 4 units would be your multi-unit home, or are we looking at a condo complex? Anything that is a single unit, a first-time home buyer can look to obtain financing with just a 3% down payment. So we always like to debunk that myth of a 20% down payment, but anything that is a single unit can require a 3% down borrower contribution. The difference is when we begin to look at some multi-unit properties. Some people may want to live in one unit and rent out another, which is where FHA comes in. And the difference between FHA and conventional is that FHA will allow someone to purchase a 2 to 4 unit property with just a 3.5% down payment, versus conventional financing. The down payment contribution is going to be a bit higher.
That's a huge difference. And share with their listeners what FHA stands for.
The Federal Housing Administration.
Okay, so that's a government insured program.
Correct.
Really important program. You know, coming out of World War II, there were many people that were assisted through the FHA and got their first-time home buyers. And speaking of veterans, another product is the VA loan as well. Is that correct?
Absolutely. So the VA home loan, different than the other two types of loans in which we just discussed. Of course, we always like to assist our veterans on the path to home ownership. And one of the greatest benefits to that veteran, the VA home loan can offer 100% financing. So they actually do not require a down payment for that loan. And it's one of the benefits that is entitled to that veteran. So the VA home loan, also an excellent program that we offer here at Conway Financial. So whether it be conventional, FHA, VA, or USDA, there's a lot of acronyms that we just threw out there anyway, but essentially we look to help everybody that we can.
There's also another program out there called Massachusetts Housing Administration, and that's specifically for first-time home buyers.
Correct. So mass housing are the state bond loans anyway, so specific products offered by just the state of Massachusetts. Other states do have their own bond loans as well, but particularly here to the state of Massachusetts, mass housing has several programs anyway, some of them which can assist with funds for down payment, and closing costs. So again, as we start to envision maybe that 3% down payment, there are certain loan products that can assist with that down payment and additional closing costs, so that people can, again, develop that home ownership that they've always wanted to.
Okay, so kind of a lot of alphabet soup here.
Mhm.
And the best part for everybody just listening that started to think, oh my gosh, am I supposed to keep track of all these products? Is remember, going back to your conductor again, the Allie and the Bonnie, they are going to help you meet that correct loan officer to help you through the process. And it's free of charge for Sean or any of our loan officers or any other loan officer to sit down and go through all these different products to do that matchmaking process, which is similar to what Allie talked about when you're talking about the properties. So that's really important. Just be aware that there's a lot of different programs. Be aware that there's lots of different, you don't have to have 20% down. There's ways to fix your credit if you have some challenges. And also there's opportunities that for gift funds from family members. And Sean can walk you through that as well.
Absolutely. So gift funds are very much prevalent in a mortgage transaction, whether it's from a grandmother, grandparent, mother, or father, or a sibling. Gift funds are very much common when people are buying a home anyway. And I'd more so like to walk people through exactly that gift funding process. Please don't just tell that person to transfer the money into your bank account. There is a very simple gift letter that people will essentially complete as you're in process. So whatever questions people have about down payment, if it's not in your bank account and maybe elsewhere, always questions just to bring up with your loan officer or your realtor, and they can most certainly point you in the correct direction.
Wow, such great advice. That's excellent. Okay, so we went through we found some houses, we matched up with some areas that we like. We talked about home inspectors. We've talked about lending opportunities. So now a client is getting to that part of the process where they'd like to make an offer on a property. And so Allie and Bonnie both talked about that form. And this is where your closing attorney can come in. So Andy is an attorney. He's a conveyancing attorney. And he provides several different services, both for buyers and sellers throughout the process. So Andy, could you tell me when you come in during the transaction and what are the different roles that you play?
Sure. So the offer itself is typically drafted between your realtor, the realtor and the buyer. They'll figure out whatever terms they want in there. Sometimes I'll get brought in at that stage. It's not a bad thing to bring an attorney in at that stage. And we'll talk about that a little later. To review the offer, to make sure the terms, if there's anything specific to that transaction, regarding like a contingency, if it needs to be just tweaked a little bit, just to make sure it's what the parties expect it to be. So I would say in between the offer and the purchase and sale is typically when I get brought in. So the offer itself is a binding contract, and that is signed prior to me being engaged. It is reviewed by me, but usually it's something that I'm getting to build the purchase and sale off of a little bit further down the river.
Okay, so the sooner the better, probably. Just
Correct.
For the
Yes.
home buyer.
Yeah.
And at that point, Allie mentioned, I think Allie and Bonnie both mentioned representation. So you're really representing the buyer at that point. You're watching their interest.
Correct. So in most transactions that are financed, I shouldn't say most, I should say in the state of Massachusetts, all of them, the lender has to have an attorney represent the bank. So usually what will happen if there is no attorney involved at the outset, which is I usually am involved at the outset, like we discussed, the offers executed and then I get brought in. The bank will have their attorney do a courtesy purchase and sale review. A lot of buyers will mistake this for that bank attorney being their representation. That does not make them a buyer attorney. So they're still championing the cause of the bank. That's who they represent. For us, what we do is we represent the buyer, and then we also handle the closing. And the difference being the starting point. We start out representing the buyer. We waive the buyer representation fees, and then we pick up whatever fees would have been allocated to the closing attorney that the bank would have assigned. So it doesn't cost the buyer any more money, but they're getting an attorney who's actually out there to protect them, because that's where we start.
I know that's the way we often work things here at Conway, and I really like that process.
Yeah.
Because the buyer absolutely has their interests protected. You know, if an attorney is coming in toward the end and they're protecting the interest in the buyer, they're certainly watching the entire process, I assume.
Yep.
But having that one person provide that overview of a really important document, and then also bring them through the closing process. So you would stay with this transaction through the closing process. What is your responsibility, Andy, at the end? Why do we even have an attorney involved in the closing process for long?
So when you're buying a home, it's important to appreciate that this is, for most people, going to be the most expensive asset you own. So title to that has to be clean. A bank attorney will certify title to the lender. But what we're doing is we're reviewing title, we're creating an abstract, making sure that when you purchase this on the day of close, you're getting 100% of what you expect. Free from defect, free from lien, free from encumbrance. Those are things that will affect the value of your home if they're not free and clear of those.
Okay, so I'm going to take some of those words and I'd like you to put some examples. So
Sure.
when you say free from liens,
Yes.
what's an example of a lien that could be on the property that maybe the seller is not even aware of?
Gotcha. So the most common one is prior undischarged mortgages. So when this buyer is buying the house, they're going to take out a mortgage. When they sell it, they will get what's called a payoff. They will pay the mortgage off. Anything that's over what they owe the bank, that's their sale proceeds, and they'll walk away. They expect that mortgage that was on record to be discharged. Now, if the closing attorney doesn't discharge that mortgage, it sits there. And it shows that there's still, $500,000 mortgage sitting on the property that's valid, that's not actually there. That's a lien, that's a defect. And those are things we need to make sure are all removed so that when the buyer enters in, they're getting 100% of the pie.
So important. So
Yep.
what that means, if I have a loan and I pay my $500,000 mortgage back completely, I take it from 500 to 0.
Yep.
I get a piece of paper in the mail, right?
Yep.
And it tells me to go to the registry of deeds and have it recorded.
Mhm.
So if I don't do that,
Yes.
that's when this type of defect could show up.
That's exactly how it happens. And most of the times we see these, and this is the most common one, is because they sent the principal the discharge and they didn't realize that they had to do anything with it. And they just take it and they throw in their top drawer and that's it.
Yeah.
And that would have a defect show up on title. Where it gets complicated is if this happened back in 2006, 2007, and the bank no longer exists. Now we have to go through and find out who the successor bank is and get a confirmatory discharge from them. But those are things that's our job, and that's what we need to make sure is done.
But it takes time.
It does take time, and you have to have the buyer's interest at heart, because
Okay.
those are things that have to get checked off.
All right. So it will get done. It
Yep.
just takes time.
Yep.
Okay. All right. That's great. What's another defect? Like, what's another example? Like maybe something having to do with the property itself.
So there can be, if someone prior to selling the house goes into assisted living and there's a healthcare lien that gets put on the property, that can be a defect if it's not discharged. We actually had a case recently that was brought to us that we had to handle, that the title examiner missed the defect. They didn't realize there was a health lien against the property. And when this party went to sell their home, it was 2 owners back, but it was never cleared. So it's still valid. They found out there was not only a mortgage payoff of $600,000 and change, there was another $550,000 medical health lien that was against their title. Now, in this case, they ended up being okay because they purchased what's called an owner's title insurance policy.
Mm-hmm.
So when you buy that at close, you're paying a title insurance company a one-time fee to cover you for life of ownership. So if these sort of defects were missed and they arise, you don't have to foot the bill. In this case, there wasn't even enough equity to foot both of them. So the title insurance company stepped in and they had to actually cut a check for over $500,000 to clear that lien. Yep.
So those title insurance policies is basically a policy to protect the buyer from mistakes.
Absolutely. And
Okay.
it's something that personally
Mhm.
I have in my own home.
Yeah.
It's not something I just advise clients to do. It is a valid thing. It's unlikely, I would say less than a quarter of these have things show up. But if you're part of that 23%, it can get very expensive.
Yeah, I'm sure. And stressful. I did want to mention, we've got about 10 minutes left. If anybody in the audience would like to type a question in the chat, feel free. And we can direct it to the right person. So Andy, you're one of the people that is part of the symphony
Yes.
that Allie and Bonnie will refer. And it sounds like, again, like a symphony and an orchestra, you guys are all kind of talking amongst yourselves through this whole process. Is that right?
Correct. Yeah, that's right. That's right. We're working behind the scenes, kind of what we just outlined, making sure title's clear, making sure all the mechanics work out when we get to the day of close, that the buyer's able to go forward with their purchase. We're working with the lender to make sure everything's funded on the day of close, making sure with the realtors that the walkthrough has been done, that there's no damage to the property. So there's a lot of concerted effort that goes into this, and having a solid team is essential, because communication is everything.
Huge. You know, one team member that we didn't spend too much time on is our insurance team member. Would one of you want to comment on, we have our own insurance company, Conway Country Insurance, which is again an option. At what point does that partner come into the transaction?
So I know from our end, we usually coordinate with the lender, and we make sure that the binder is in place prior to us getting to the closing table, just so as soon as they take title, that policy immediately becomes it vests, so it's effective. But I know that that's something, I think, Sean, do you put them in touch with the insurance company?
So it's a great question. And when we're working with the Jack Conway agent, of course, we always refer Sarah, but generally where we would refer Sarah is once we're moving to that purchase and sale agreement. So they're going to move forward with the property. And, of course, at that point in time, they're going to need insurance for this particular property. So that's where we do bring Sarah in, and that's where she'll impress everybody with her insurance skills. So.
All right. So the offer first, you've got Andy, you talked about it. Come back to us for a second. You have the offer that you review.
Yep.
And then how many days later does a person sign that document, the purchase and sale agreement?
I would say typically within about a week, sometimes shorter, depending on whether or not they're doing an inspection, but usually within a week. We draft the purchase and sale. Offer is binding. Purchase and sale is going to supersede the offer. That's your contract that's going to outline obligations of the parties, that sort of thing. Okay,
so in between offer and purchase and sale agreement, you said inspection. You're talking about the home inspection?
Yes.
Okay,
Yep.
and you use the word supersede, so that means like replace. It goes.
Yes.
The offer goes away.
Yep.
The document that Allie and Bonnie are now working off of is the purchase and sale agreement.
That's correct. The reason we wait till after the inspection is if they go through and they find something that they want either fixed or they want a credit for, we want to make sure we have the ability to still amend the purchase and sale agreement to reflect whatever they're looking for, as opposed to having a final version. So it will usually follow that.
Okay. All right, great. So if I'm a first-time buyer and I'm listening to this, I'm thinking, wow, there's a lot of details here. And, as you get into the mortgage process and the title process, there's also things that can derail the timing a little bit, right? Mm-hmm. And I think that is one of the most important aspects of this conversation right now, is that having a group and a team that like, and trust, that you can rely upon and help you through the process is so important, because there are things that could derail the process for a day or 2 days or maybe more. Yep. And you need people that are going to tell you that, keep all the players calm, because it's going to happen, and then continue moving you through the process. Allie, you're smiling. Is that something that you feel is a big part of your responsibility?
Definitely. I like keep the players calm. That's definitely a great analogy, because, we're all working behind the scenes, and sometimes, a question will come up and we can get it resolved before it even becomes an issue, just by reaching out to Andy or Sean, and just in relaying the answer back to the buyer, just to calm any fears and let them know that this has happened before and everything's going to work out.
Okay, good. Yeah, I think that's really important. So if they do have a question, Andy uses a word like encumbrance, and they're not really sure what that means, they're going to come back to you again, kind of explain how it applies to the whole process. Okay. Bonnie, I'm going to ask you from start to finish. So from the moment that a person finds a home, that they love. All right. What do you talk about the timing involved? How much time is involved in this entire process that we talked about?
Yeah, generally 30 to 45 days. Now, I've had Conway Financial do it. I mean, we've closed it in 20 days. Because they can do that.
Trish is awesome. So
You can do that. But generally it's 30 to 45 days is a standard one. But I mean, it all depends. It all depends on if the seller is, if they're looking for suitable housing. There are so many factors that go into play. But a general standard is they find a home, an offer goes in, offer's good, generally 24 hours. 24 hours, they get an answer. We hope it's the answer we want. That's a yes. 10 days for a home inspection. Purchase and sale, generally signed 10, 11 days after the offer accepted. Their mortgage application, I put usually the same day or the day after purchase and sale, because they really need that to go full force with the application. Mortgage contingency, which is what I call, that's when you're going to get your blessing from the mortgage company that they're going to grant you this, this mortgage. Generally, I back out about 2 weeks from closing. That gives time for the appraisal and all of the other little things we need to do, the insurance binder, all of that. And then closing, generally from the time we sign the purchase and sales agreement, we bump it out about 30 days. So it's about 45 days from finding the one and getting that call that congratulations, your offer's been accepted, to when keys are put in their hand.
I love that. That was so good, really clear. And then there's probably ebbs and flows in there.
There's always, and that's part of the buyer consultation is, look, there are going to be hiccups. There always are, but they're hiccups and they're easily overcome. They're usually just something. It's a 2 or 3 day extension may be needed on this or that, but it's okay.
It's okay. It's okay.
It's okay.
All right. So we have 4 minutes left. And this has been such a great conversation. I think we could probably talk about this for hours. I'm going to ask each one of you just to send out to the audience, what you really want them to remember from this conversation. Andy, I'm going to start with you.
Sure. I'd like to send out that you're not expected to be experts. You have team members for a reason. Every one of them is a professional in whatever genre they're in. Reach out to them and feel free to do that. It's something where I'm always available. You can get a hold of me 7 days a week, text messaging, calling my cell, whatever's convenient. But don't feel like it's a stupid question or that you have to know the answer to it. Don't Google it and think you understand it. Please just reach out anytime. It's never something that I discourage. I actually like when people are interested in this and they want to learn, because it's your house. You're buying it. It's something you need to feel comfortable with. So I would just put that out there. Don't ever feel like a question is a dumb question that you can't ask. You have people here for a reason.
So there isn't a real estate MD, like a web MD for real estate, and they need to ask a person.
I think there may be sites that think they are,
There
but I
might
read
be.
some of them and I'm like, oh my gosh, that's totally wrong. And
Yes.
it's going to get someone in trouble. So
That's scary. Okay, that's great advice. Thank you, Andy. And thanks very much for everything you shared. That was excellent.
absolutely.
Sean, how about you?
Mine is going to be rather similar anyways, and no question's a dumb question. Yes, when even if it's a simple term, right, some of the acronyms like we went over, or the most popular one I get, what is escrow? Any question that you have, for your attorney, for anybody whatsoever, there are always questions that can be answered. So no question is ever a dumb question.
Excellent. I love it. Thank you so much, Sean. Appreciate everything that you shared. That was really great. Allie, what do you want to leave everybody with?
So I'm going to piggyback on both Andrew and Sean's. No question is dumb, and communication is so important. And the fear of the unknown is much larger than knowing the answer. So ask away. We're all here to help you. And it's a learning process.
Excellent. And it's kind of exciting too, right? It's
Definitely
exciting process. All right, great. Thanks so much, Allie. Appreciate your contributions. And finally, Bonnie, close us out.
I'm just going to say, the theme today, I think, was real estate is very local. And I think everyone is hearing a lot of different information, whether it be media or online, and, go to your local expert to get your local market information. It is not, it's not all doom and gloom. And yes, interest rates are up, but there are so many options. Go to your local expert to get the real information on your market and what's going on in your area, and what products and what options are available to you. Because there are products out there, there are options available. We can get you on the path to home ownership.
I love that. What a perfect way to end a really excellent conversation. And, if I were a first-time home buyer listening right now, I would be thinking, I'm not going to be alone in this process. There are people that I can rely upon that will be upfront, will be honest, will provide excellent information, and that I can trust. So that was absolutely fabulous. I want to thank the four of you for your expert knowledge, your willingness, and to be open with all of our listeners. And I thank you for everything that you do for the buyers and sellers of Jack Conway every day. So have a wonderful evening, and thanks to our audience for joining us this evening. If you need anything else from us, please reach out to one of the people that you're hearing from tonight, and you will receive some follow-up information from Jack Conway if you care to respond back to that email with any questions. So thanks so much, and have a wonderful evening. Bye, Dad.
Thanks.
Thank you.
Yeah.